Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel dedicated mostly to the top-down analysis of different financial securities using pure price action trading strategy. And today we're going to be looking at the US 30. So without wasting much time, let's get to it. Currently on my chart, I'm on the monthly time frame, and from what we can see, it's very easy to spot that this particular index has been going up for quite some time now. I already have my key zones mapped out just to keep the video as short as possible. But for those of us who do not know how to draw these key zones, I have a video dedicated to it on the channel, which you can always check out. So, like I said, this particular index has been trending upwards for quite some time now, and the way I do my analysis, the monthly time frame, mainly starting from here, the essence is to get a directional bias of the market. So this market has been giving us, has been making a series of higher highs and higher lows, higher highs, higher lows, and it has been doing it in a big way. How do I mean? If we look at this move from 2020, the market made a big impulsive movement upwards, came down, retraced down a bit, embarked on another big impulsive movement, retraced, made a little retracement, and it is currently on the impulsive leg. Now, the reason I did this is to make us see how far the impulsive leg goes before we get a retracement, and we can see that from this first impulsive leg, it is almost similar in terms of strength to the second one. The same applies towards the retracement. So why do I say that? This would give us an idea of how long we expect the next impulsive movement to go. So bearing this in mind, this will inform us that the impulsive movement of this particular index is not over yet. However, because we are looking for directional bias, we can see that from the beginning of this month, today is the 3rd of September, from the beginning of the month, we can see sellers trying to give the impulsive movement a little breather so that it could probably grab some liquidity to fuel the continuation of the upward movement. So what's our directional bias? We believe that this asset is still going up, but just for the recent tick, then that sellers are trying to push the price downwards a bit. And also we can see that price is currently on a key zone. So to get the structure of the market that we can work with, or that we can work with here, we should go to the next lower time frame, which is the weekly time frame. Now, on the weekly time frame, we can see that the structure of the market becomes a bit much more pronounced. How do I mean? We see this big movement we saw from the monthly time frame. So we can see an upward movement, a retracement, an upward movement, a retracement, an upward movement, and price is currently retracing. So for those that have been following my videos, I use 3 basic tools for my analysis: the support and resistance zones, the trend line, as well as the Fibonacci retracement tool. So this would be the best time for me to add another one of these tools, which is the trend line. But before going on, like I said, the weekly time frame gives us an idea of the structure of the market we'll be working with. So if I go to the line graph, we can see that the most recent structure that the market is presenting before us is this simple bullish structure, where the market makes a high. Sorry, let's do this again. So where the market gives us a high, comes back to make a higher low, and then goes upwards to form like a higher high. So now why am I saying this? The simple bullish structure that we have from our line graph is this. We have this, and the market is currently coming down to retrace the initial high. And the simple rule for trading this is that we map out the resistance zone that has been broken, now turning to support, and then when price comes back into this zone, we can start looking forward our buy opportunities. However, I must also state that even though this seems to be like the textbook way of trading this, price has the liberty to come down below the support zone to grab liquidity to fuel the continuation of the upward movement. So what do I mean? Price can actually break below the zone and has the liberty to even come from like a double bottom before deciding to embark on its upward direction. So let's take this out and look at how this applies to the structure that we have. So having gotten the explanation of this structure, if I'm to look at what we have, that means I can simply bring my zone with price coming downwards. So let's go back to the candlestick chart. So, like I said, we can see price coming downwards, but a lot of people say that price is currently on a strong support zone, which is true. But it's also possible for buyers, or rather the market makers, to use this zone as a liquidity zone. Now, how do I mean? Price can still push below the zone to grab liquidity before moving upwards. So the next thing to do would be to go to for me to include my fib tool, which will be from the swing low to where price is currently retracing from. And on my fib tool, for those that have been following me, after I have a very special zone I call the Fibonacci Retracement Golden Zone, and that's the zone between the 50% and 61.8%. So this completes my confluence. So I have my trend line, support and resistance zones, and my Fibonacci retracement tool with my special zone mapped out. So the next thing I'll do will be to go to the next lower time frame, which is the daily time frame. So I call this the tradable time frame because it gives us the most recent trend of the market. So now if we look closely at our setup, we can see that just like we spotted earlier from the monthly time frame and confirmed from the weekly time frame, the sellers are pushing price downwards. Like I said, although price is on a very strong key zone, we can see the momentum of the downward movement is still very strong. So if you ask me, what do I think? I believe that the market makers would probably use this zone to grab liquidity because they know that a lot of people will be placing their buy trades or buy orders here. So they grab, and their stop losses will be underneath the zone. So they are likely to push price downwards into this fib golden zone before the price will embark or continue in its upward direction. So, like I always ask, having our setup and our most recent trend before us, how do we take advantage of this particular setup? So, if you ask me, we can go to the H4 time frame, from where we can start maybe probably looking for our entries. Now, there are few scenarios that are possible. Like I said, this place could be used for liquidity grab. However, if we are able to get like a change of trend within this zone, then we can start looking forward our buy opportunities. But I would also want to say that if we are to do that, we have to be very, very careful because, like I said, I still suspect this could be used as a liquidity zone. So my safest bet would be to wait for price to come into the zone, and then I can start looking to take my buy trades, probably by spotting like a bullish engulfing candle, or there's a double bottom here, or I have like a counter trend line broken and retested. I can start looking to take my buy trade. So this is my simple outlook on this particular index US30. So if you trade this index, you can compare this always with your analysis and see if it aligns. And if it does, do well to drop a comment in the comment section, even if it's a thumbs up or a like. So you can always like and share this video with others to gain from it as well. So like I stated, this is a trading academy. Our mentorship classes for the month of September started on Monday. And if you're interested, you can always chat to us via the link and contact details on my YouTube bio. Thanks for stopping by my channel, and shout out to those that are always supporting this channel and following it. I super appreciate you. Thank you, and do enjoy the rest of your trading day. Cheers.